Hey, what's happening, guys? Dan Darrow here with another Options in Play video update. Uh, Popped up as a question during the day on the VTF, and I figured I hadn't talked about it in a while, so why not do a little quick video summarizing what the price didn't move is. You've probably heard me speak about it a lot when if you've watched those earnings videos that I've done basically each week, highlighting the companies that are reporting that coming week and what the expected move is, right? So you hear me say like the market's expecting this or the price to move is this, right? And people are wondering like how do you come up with those numbers? So Facebook, just use it as like a really quick example. They're expected to report after the close. Everybody, has an opinion and they're wondering what the market is saying movement rise, right? Like how much or how big of a move is priced in. Okay, so the easy way to go about it. This is the option chain that expires this week. So this is important because you want the closest to expiration contracts. Okay, because those are going to the ones that have like the least amount of time value, meaning that the event will carry the most significance for the pricing of those contracts, right? Because if you're looking at Facebook options that expire a month from now or 2 months from now, there's a lot of time value. So yeah, the earnings report is going to be significant, but you also have a month, 2 months of time value, which will also kind of push up the premiums, right? So these options expire Friday. The company reports today. That means there's basically 2 days of trading. So a majority of the premium of these contracts is this event, right? So for Facebook, trading around 172.50, right? So to calculate the price to move, it's the at the money straddle. Stock is at right around, so it's technically at 173, but if you use the closest to the money, right, so it's a 172.50. So you add the call, so the call is about 12.10, and you add the put, which is about 11.50, right, and you come up with 23.60. So give or take 23 and a half points is what's expected movement wise on Facebook by the end of the week Friday, right? And because there's only 2 weeks until expiration, a large portion of the premium for these contracts is that earnings report, right? So that's the expected move for Facebook by Friday's close, 23 and a half points. And that gives you like a really good feel for what you can maybe look for movement wise when the stock reports. If it moves more than that, then people say options get paid. If it moves less than that, that means that the sellers typically get paid, right? So if Facebook only moves $5 and was pricing in 23 and a half, options are going to lose a lot of their value. If Facebook moves 40 and options are only priced in 23 and a half, well then people that were long premium, assuming they're on the right side of the direction, they could really make some nice money. Okay, so that's why it's useful to know. It's super simple, really straightforward, easy calculation, and around earnings season, everybody wants to know what's expected. So I figured I'd walk through it. Okay. Um, so it should be a busy couple days of news. I mean, we have some really big companies reporting. So hoping for some good action. We'll just see what we get. All right. So if you like this video and you're looking for more information about trading events or earnings with options, please follow up with the link in the description of the video for more information on options and play. Have a great night. Stay well. Best of luck if you're playing any of these reports, and I will talk to you all tomorrow.